Good evening to everyone. Welcome you all in today's session. I'll request everyone to put your right hand on the heart. So, Shazad bhai, can we have the ICI motto?
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Now I'll request our dynamic chairman, Sri Harit Dariwal, to give brief about this particular session as well as the activities of the branch. Over to you, sir.
Thank you, Rahul bhai. Respected faculty for today's session, CA Vignesh Mathur ji, who has joined us live from Mumbai. We have CA Utsav Hirani, the person who connected us to the faculty and always been helpful. Thank you, Utsav, for always being there for the branch. CA Rahul Maliwal, the CP committee chairman, also the Vikasa chairman. And seniors in the profession, dear friends, a very, very good evening to all of you. And welcome to this very, very interesting and a unique session on the SOPs and the best practices in procure to pay. Normally, when we talk about technical sessions, we have a lot on the income tax and GST and other stuff. This year we have really thought out of the way. I think thanks to Rahul bhai, we could come up with this really innovative concept wherein we are having these SOPs and best practices in procure to pay. Now, when we talk, we got a lot of queries from members, regarding these SOPs and regarding how to, streamline the vendor payments and all the stuff. So based on that, I think Utsav and Vignesh ji developed an entire session wherein we are, we will be guiding on how to prepare SOPs for our clients. This is something which we can take as a new professional opportunity also. So thanks to both of you, I think for this session, we have been really enriched to have that. Coming to the few activities of the Ahmedabad branch, I am almost at the end of my tenure. We have just 9-10 days to go, and very happy to share with you that this year Ahmedabad branch has received all the 4 awards, top 4 awards, 2 national awards and 2 regional awards. Both for the members and students, we got the first prize. So thanks to all the members, all the students for all the support throughout the year. We have again a very good news. I think we all know now that Aniket Talati has been appointed as the vice president of our institute. So he has really made all of us very proud. So again, a matter of pride for us at Ahmedabad. Coming to the session that we have, I think our cricket tournament is going on in full swing. We have this time 16 teams competing at the very premier grounds of SDVP and Adani. And tomorrow, that is on Sunday, we have matches from morning 8 o'clock for the entire day, and evening 8:30 we are having the finals. So all of you are invited to watch the finals at the Adani Shantigram, the stadium at Adani. It's there live tomorrow. The matches are also streamed live this time. So both the matches at the SDVP and Adani, you can see live. I think a lot of members are following live, and more than 23,000 members have seen the live matches so far. Apart from the CAs, I think of Ahmedabad, others have also seen these matches. So very good response that we are getting for that. A special session on the Gift City. Now, again, a very interesting series, a very new innovative opportunity that we have at Ahmedabad for all the members. So we are, not only considering the Gift City as an, as an investment avenue, but we also covering the IFSC, the authority which is there, and also the Indian Exchange. And we have including the FEMA implications and the income tax implications and the opportunities the CAs have in the Gift City. So all these things have been, compiled in a series which is starting from 22nd of February. And we have got a phenomenal response, more than 350 registrations already we have got in a single day. So I request all of you, if you have not registered, please do that. It's a very good series on FEMA. From Monday, we are also starting our tennis tournament. After the hectic due dates, it's a time to unwind. So first ever tennis tournament on Monday morning. On Monday evening, we are starting the doubles tournament. So both these tournaments are going to start in parallel. And yes, the elections are around the corner. 26th February are the elections at Ahmedabad branch. Again, I would urge all of you to come in large numbers and vote for the candidates which are there for the upcoming elections. With this, I once again thank all of you. Thanks to speaker. Thanks to Utsav bhai. And over to you, Rahul bhai, for the introduction. Thank you.
Thank you so much, sir, for giving the brief about the activities that are going to be held. Now, with regard to the today's faculty, Vignesh bhai, he is a chartered accountant, graduated CWA, and has completed the advanced diploma in the management accountant from CIMA. He is engagement partner in the practice consulting. Vignesh bhai is having over the 10 years of the experience in the audit and consulting, and he has worked with the EY, Deloitte, and KPMG. He has led a wide range of the project in the finance transformation, covering the finance process redesign, process improvement, business partnering, and the management reporting. It will be definitely great to listen you, sir, because it is totally a new area to practice and to find out what are the SOPs and everything. So with this particular background, I'll request Vignesh sir to take the session forward.
Thank you, Mario sir. Thank you, Chariwal sir, for giving me this wonderful opportunity to talk to you and in front of the entire Ahmedabad branch of WIRC. And thank you, Utsav, for actually getting me in touch and ensuring that I can be a part of this event. So I think what I'll do is let me just share my screen, and I think we can then get started. Do let me know if my screen is visible.
Yes, it's visible.
Yes.
Sir.
Yeah. Okay. So I think what I want to talk about today is to do with SOPs. You know, what are SOPs? Why do we need to create SOPs? What are the typical characteristics and components of an SOP? And then do a deep dive into P2P as an area. Because I mean, when it comes to finance areas, I think there are a lot of areas which come under finance, which would be in terms of strategic finance as well as in terms of operational finance. You know, it could be things like planning, budgeting, as well as P2P. Then you have order to cash or the entire revenue cycle. We also have, you know, typically where accountants get involved in maximum areas would be things like, say, fixed assets accounting as well as the close cycle. And since some of these areas become very specific to an industry, so which is why I thought the best way, I mean, one area that is probably common across industries would be procure to pay. Because I mean, as an area or as a process, that is something which does not change too much. So I think what we learn from one industry or from one company is something that we can easily apply to other industries as well. So I think what I would like to cover today would be what is an SOP? Why do we need an SOP? Some of its characteristics and components. I mean, how do you go about actually creating an SOP from scratch? And then I would like to do a deep dive into procure to pay. And again, I mean, if you have any queries, etc., when I'm presenting the screen, there's something that you want to ask me about, please feel free to do so. I'm always happy to take queries, and and we can always spend some time so that it is a more interactive session. Yeah. So let's start off with an SOP, right? I mean, why do we need an SOP at all? I mean, of course, if people have been doing process since aeons, things are going on, companies are flourishing. Do we really need something which is documented and written down, which someone needs to follow exactly to the T? So one of the biggest advantages of having an SOP is the fact that it reduces individual dependence. Now, what typically happens is that there would be a few people who are experts in one area, and in case they leave the company or God forbid something happens to them, all their knowledge is actually lost with them. And it is, I mean, and of course, not each and everything can necessarily be documented, but there are quite a lot of procedures, and the way you need to approach a certain problem is something that definitely needs to be documented, so that we can reduce the dependence and ensure that all these things also become scalable. And that has a direct impact on your future growth as well. Because I mean, see, like at this point of time, you may be at a certain scale, which is happening maybe even without something being documented, or people all doing a certain process in their own way. But when you really think about fast growth, right? When you want to get new employees, open new branches, or maybe acquire companies, open new plants, for instance, that is when consistency becomes a very key aspect to ensure that this growth takes place in the manner that has been envisaged. So I mean, it shouldn't so happen that branch A is doing, say, the sales process in a certain manner, while branch B is doing it in a completely different manner. I mean, this ensures that even when it comes to accounting, our numbers are accurate and they're consistent. And even if there is an audit in the future, there is no differences between two ways of doing the same thing. And it also helps to simplify performance management. Now, performance management today has become an important exercise. I mean, we all want to ensure that our employees are we are measuring their performance accurately, and it's also done in a very fair manner. So, I mean, if the way they approach any process is very different just because someone has not really told them that this is the best way of doing things, then it becomes a very unfair comparison between two sets of employees doing a similar process. And that is where having a benchmark becomes very important, so that the base is set for them to improve on things. I mean, they all know what is expected of them and how they need to do it. Now it's up to us to measure whether they're doing it properly or not. So again, simplification of performance management also becomes very effective through having proper SOPs. Now, what are the characteristics of these SOPs, right? So first of all, it is a holistic document. So it does not cover any one single aspect of a process. It covers the entire process end to end. I mean, all the way from how do I procure something, how do I raise a purchase order, all the way to how do I pay the vendor and I do my vendor reconciliation. So it covers the entire gamut of activities that happen within one single process. Again, it is a single consistent format which is across the entire company. I mean, and of course, I mean, if there are multiple companies within a single group, especially on account of acquisition, it becomes a format which is used across the entire group as well. And yet, it is tailored to a specific process. I mean, the format may remain the same, but it also ensures that every process which has its own unique characteristics are also captured within that. So, and the level of details which are required. I mean, when I say talk about the P2P process later on, I mean, I'll of course show the entire journey of what happens there. But an SOP goes down to a keystroke level. I think that is a terminology which is often used. All it means is that to the nth level of detail is something that needs to be captured in an SOP. And the way it really helps is that any new person, right, who joins the company, if you give them the SOP, they should be able to go through the SOP and replicate that on the system as well. That is if a new employee is able to follow the SOP and execute their tasks very well, I think then you can know that your SOP is probably perfect. And it also covers all possible scenarios and exceptions to the main process. I mean, let's take a simple payment case. The default could be, okay, so somebody has a vendor, an invoice has been submitted, we have reached the due date, and then you pay. There is one scenario. I mean, there could be multiple scenarios. Maybe there is an emergency payment that needs to be done. There could be an advance payment that needs to be done. So there are multiple scenarios and exceptions that could exist within a standard process. So an SOP is meant to cover all these exceptions as well, so that these exceptions are not something which may come up every now and then, but whenever they do come up, I mean, people should not get confused as to how do we execute them. Next, we also get into error handling. Now, errors are something which often happen. I mean, either because of system issues or maybe because of human issues. It is necessary that we document these errors, and we also give solutions as to how to recover from those errors. So nothing is perfect. I mean, no matter how much we try to achieve perfection in whatever system or technology or process that we set up, there could be errors, but it is important that we know when we face an error, how do we really get past it. And it also defines the responsibility, the roles and responsibility for each and every step. That anyone who reads a particular activity knows exactly who does the activity. I mean, it is possible that maybe the sales team takes care of one aspect of it, the accounting takes care of the second, and the logistics team takes care of the third activity or in that particular process. So there is no ambiguity in terms of who does what. And that is very important, so that it shouldn't so happen that some process just completely falls through the cracks simply because it was never discussed or never openly documented who needs to do something. And of course, we also have, and there's a lot of visualization which becomes important, because it is important to ensure that the procedures are very clearly illustrated. I mean, you can write, you can fill up a lot of prose, or you can fill up a textbook writing it, but that never has the appeal or the only if there is a visual way, does it make it easy for the reader also to understand it at a quick grasp as to what needs to be done. And then for details, they can always refer to the text. And of course, it also gives you, if there are any regulatory requirements which necessitate this particular process to take place. Now, otherwise, those are something which can honestly get lost, and which, again, some of these things might reside with one person, but they might get lost in the future, and we might think, why do we even need to do this particular step? So that's where even the regulatory and other information, or there could be an accounting standard which prescribes you to perform certain activities, that also gets documented. And quality control, like I mentioned, it ensures consistency across the entire value chain of what we want to do. Any queries so far, or shall I move on to the next step? Okay, I'll then move on. So, what are the components of an SOP? So this is how a typical SOP would look like. So we are talking about, say, order to cash, right? So we give a high level process objective. This talks about what this process is, why are we really doing it, what is the high level process scope, because it's also important to define the scope of that particular document, that what is in and what is out. That is, anyone reading the document should be aware of that. And what are the process objectives? Then we get into the activity details. So this is of course, as you can see, it is an SAP screenshot. So we put at a screenshot level, and we also highlight exactly what needs to be pressed, which key needs to be pressed. We go down to that level of detail. Then we get into the process, the process of flow and the business suits. So this gives the entire flow that needs to be followed. So, at one glance, any reader will know, okay, these are the, these are probably the activity or 10 activities which we need to do. So for each of these 10 activities, of course, there could be 2-3 steps per activity, which is what really gets captured when we go into the into the process narrative, and the risks and controls which are there, and the regional exceptions as well. So maybe for one particular region or for one branch, you might have to do things separately. Again, that could vary because there are certain regulatory requirements, or if something may not apply to a particular branch or to a particular region, hence those also get captured in this particular document. And risk matrix is also very important, which is what we talk about here. So as you can see, this very clearly calls out who is responsible for an activity, who is accountable, who should be consulted, and who should be informed. Now, what do these words mean, right? So responsible essentially means that the person who actually executes that task on the ground. So that could probably be an accountant who's actually executing that particular transaction, say for creating your sales invoice. Now, who is actually accountable for that thing? Now, just because someone is responsible for creating it doesn't mean that they're accountable for it. And simply just because someone is accountable for the success or the accuracy of a process doesn't necessarily mean that they are actually on the ground executing it every single time. So in this particular case, maybe the CFO is the one, or maybe the finance controller is the one who is accountable to ensure that this particular task takes place properly. Now, consultant is essentially someone you might have to go to kind of request their inputs on how do you perform your activity. Now, if it comes to a sales invoice, probably you would need some information from your sales team to ensure that, or from a logistics team to check whether the goods have been dispatched or not, for instance. So they become someone whom you consult in the entire process, and informed could be Maybe it could be your business development team whom you inform that, oh, we have successfully executed this order. So they are also aware, because they are the ones who are, say, bringing in business to you, and they also need to be aware that this particular order has successfully fulfilled. So this becomes very clear, and this is something which is done at an individual step level. So all these 4-5 steps that you see, for each and every step, we actually document this so that there is no ambiguity in who needs to perform what activity. Yeah. So next, how do you really go about creating an SOP? Right? I mean, some might think, it's probably common sense, right? Oh, we are doing something, let's just simply put it on paper. But I think what happens then is you actually lose out on a chance to improve that particular process. Because what is important is that it is not just about documenting alone, because documentation will only take you so far. But again, if you're really going to embark on an exercise to start documenting an SOP, it is also important that you try and improve the process, because this is the best opportunity that you have, because nobody can do a process improvement on a regular basis. I mean, most companies probably do that maybe once in 3-4 years, or maybe even more than that, because it is a pretty huge exercise. So how do you really go about this, right? So first, I think we need to agree on the extent of the SOP itself. Like I mentioned, what are the ins and what are the outs? I mean, do we stick to a particular domain, or is it an end-to-end view? Now, domain would mean, I mean, are we only talking about the processes which the finance team does, which the sales team does, which the procurement team does, which, say, the marketing team does, or are we looking at the end-to-end view? Now, there is, I mean, the ideal answer would, of course, be let's always create an end-to-end view, right? I mean, right from how do you find customers all the way to getting money from the customer. That would be an end-to-end view. But that is not always possible to do. Again, it depends on the complexity of the business and the time that each department can actually put into this work. So you agree on a scope that you need to do. And again, it could be driven by different teams. Maybe the sales team takes care of their part, the finance team takes care of their part, and maybe the reporting team takes care of their part of the activities. So again, I mean, I would not really prescribe this. There's only one right way of doing things. I mean, idealism is good, but again, ground realities could be different. Next is to perform a diagnostic on the as-is process and identify gaps. So if you are really, how do you document anything? It's only when you understand something in a lot of detail. So if you're really going to go down to that level of detail, if you have to finally go down to the level of detail of actually identifying which screen is open, which button is pressed, what do you upload, let's go a step beyond and also identify, are there problems in this particular process? Is there something that we can improve today? And maybe that improvement can, I mean, again, if you look at the improvement pillars, they're typically into 3 pillars. I mean, you can improve the process, you can improve the people, and you can improve the technology. People, process, technology are the 3 pillars on which any improvement project really rests on. So that is something that is always important to do a diagnostic and on the as-is process and identify all your gaps and issues that exist therein. Now, and how do you really identify these gaps, right? I mean, it's not that you just go and see a process and they'll automatically become apparent to you, because many of these things are not really process-related gaps. So what you typically do is to do a voice of customer. Now, everyone in the organization has a customer, right? I mean, when it comes to sales teams, probably it becomes very easy. Oh, your end customer is their customer. But as finance professionals, our customers essentially become the sales teams, they become the procurement teams, they become our higher management. They might even become your investors and other stakeholders. So it is important that we also get their views into what do they think about the way a process is operating. Because maybe there are certain issues that probably become apparent or are probably just probably get hidden simply because people just want to get things done. So a voice of customer becomes a very important activity that you need to do. Once you do the voice of customer, then you're supposed to do a deep dive into the process itself. You do, and again, it's not. And one thing that you need to note: this is not an audit. We are not trying to find faults here. That is a very clear demarcation between, say, what an audit does and what you would do when it comes to improving process. You're neither here to check the accuracy of how you're doing things, nor you're trying to find faults. You're just trying to improve things. So when we really approach anyone, I mean, any client with that mindset, to show that, oh, there is a way you can actually improve the process, than to tell them, oh no, these are all the faults. There are a lot of problems. It completely changes the way people even approach. Because I mean, you always go with the approach that you want to improve someone's life, than saying, oh, this is, oh, your life is a mess. What to do about it? That's the way. I mean, again, it all becomes about semantics. Finally, probably there's not going to be a very major difference between how an auditor looks at one process and how you look at a process, but the mindset is different. So again, no, once you've identified these gaps, once you know, okay, now these are the 10 things that you need to fix. Now, how do you go about actually trying to fix them? So you probably create your 2B process flow. So we looked at the as-is or the current way of doing things. Now we look at what really needs to be fixed in the future. And that is what we call the 2B process flow. So there you create the entire process flow. I mean, again, at the lowest level possible. I mean, what we term as a level 4 or at a level 5, which ensures that you look at every single step or every single activity which happens. And you also cover all possible scenarios that are there. So maybe you have PO-based payments. You could have a different set of activities for non-PO-based. You could have a third set of activities for a government levies payment, maybe a fourth for advance payments. You could have multiple such processes which happen, and you document the entire process. And while documenting it, what you also need to ensure is to identify wherever there are technology interventions required. Now, in this day and age, it is very difficult to achieve a significant improvement in any activity merely by doing process changes alone. There is some, I mean, there is definitely some or the other technology intervention which is required in order for us to really go to the next level. So now, how do you really identify this technology intervention? I think, I mean, I'm sure such kind of seminars and CEP that happen probably introduce you to a lot of new technologies which are out there. I mean, I will be covering a few of them which are relevant to P2P in the subsequent slides. And that's how we think of what really what is really applicable to a particular problem statement that we have. Next is, of course, to create a roadmap with a business case for each implementation measure. Now, these measures could either be in terms of, like I said, maybe we implement a new technology, maybe we try and streamline the process, maybe we just try and standardize the process across our various regions or our various branches. All of it needs to have a business case attached to it. At the end of it, no, to do any of this is not free. I mean, you are investing your time. You are probably you've invested. Rather, all the teams that you have spoken with, they have invested their time. Now, all of this needs to have some sort of return on investment, right, or ROI. So that is why whenever we create a roadmap, a business case becomes a very key responsibility. Now, a very simple business case would be FTE reduction. So that that may not necessarily always be the case for each and every improvement that you bring in. Now, of course, there are certain technology measures, say for instance, robotic process automation, where definitely you would be able to see FTE reduction. But that is not the only thing that you can look at. I mean, even in terms of the time that people spend, right? I mean, what is a typical complaint that you hear from any CFO or even from your finance controllers? I don't get enough time to actually do a detailed analysis on what I need to do in the future, because I'm so caught up in just ensuring that my books are right and they're closed on time. So that is how you probably might have to put your business case. I mean, maybe today, I mean, at this point of time, maybe you're spending 80% of your time on operational activities or tactical activities. How do you change that to maybe, let's just say, let's first reduce it to 60. Maybe you do some of these things and you actually reduce it to 40. And that's the way we ensure that you can also put in that business case in terms of the time that is spent. The other way could be certain soft benefits that you realize. Maybe there is a DSO improvement. I mean, DSO improvement is of course a very hard benefit that you realize, because your days sales outstanding reduces, your payment terms, your payment outstanding reduces. You see very upfront working capital changes. That again becomes a very tangible business case that you can see. mean, just by seeing, oh, all my process will be standardized, is not tangible enough for most people. I mean, even for me, it is not a very tangible thing, because I mean, although we do realize that those are good things to have, but how do you really put a dollar value to it, right? It's very difficult. So that is where we need to identify such activities, be it in terms of FTE reduction, be it in terms of working capital reduction. Maybe you identify ways to actually try and reduce your interest rates, or maybe you identify ways of freeing up surplus cash that can be invested elsewhere. Multiple of such avenues exist, and which is why we need to create a business case and also a roadmap. Because no project at the end of the day, I mean, just because you've identified 20 initiatives, until unless we have a very clear roadmap, it is very difficult for anyone to start work on it. When you create the roadmap, you also identify and assign the individual, I mean, you create projects out of it and assign them to individual people, so that they can then take it over and then they can lead it to completion. But I mean, I think we all need to agree that it is not possible for one person to drive everything on their own. I mean, of course, we all need to dedicate, and that is where this roadmap becomes very useful, because you know exactly what needs to be done by when, and whose neck you need to catch to ensure that it happens. Now, once this is done, then we can actually start looking at the SOPs. So as you saw, I mean, for the first 4 steps, I mean, the word SOP doesn't even come anywhere, because you are all looking at how do you improve things. And then we actually get into the activity of trying to create these SOPs. Now, you might think, oh, but I need to maybe, implement this particular, maybe I need to implement RPA, or I need to implement some sort of chatbot. Those are, of course, things which happen. But that doesn't mean that I don't start documenting things right away. Because when it comes to for most process, I would say maybe about 60% of what you were doing earlier will probably will remain relevant even in the future. So you don't need to wait for everything to happen and then start documenting, because again that will become too late. Or maybe you have implemented everything. Of course, your software vendor would probably create a user manual for you, but again, your software vendors are not really experts in creating an SOP. They're probably experts in creating a user manual as per what they understand of that particular software. But that may or may not cover everything that you did. So let's start documenting our SOP. Let's go down to that nth level. Let's start putting in those screenshots, whatever, or maybe you have some calculation logic. For instance, there's some warranty claim, right? You might have your own warranty sheet. Now, is that warranty provisioning formula being used by everyone? May not be. So let's put that also in that document, so anyone who goes to it knows exactly what needs to be done. In parallel, you start implementing the technology measures. Now, how do you implement this technology measure? I mean, do you just call a technology vendor and tell, oh, I need to implement this, please go ahead and do so? Again, that might or might not work. In most cases, it won't really work, because at the end of the day, we need to be very clear on what we want to achieve. And this is where most technology implementation actually fail, because I mean, we as the end consumer or the end recipient of any technology need to be very clear what we want to get out of it. And that entails creating a very detailed business requirement document, or the BRD that I mentioned here. So that every possible scenario, every possible step that is possible, that could happen, if we document it very clearly, it just makes your software vendor's life easy. And if their life is easy, it just increases the percentage of success of your particular technology. Excuse me. Yeah, sorry. Yeah. So again, so then let us create our requirements in great level of detail, and then create our requirements in a great level of detail, and then we actually get into the whole build phase, UAT, go live, and hypercare. Again, this is probably a very waterfall model. Today, of course, the world has gone into an agile way of doing things. But again, even within agile, it doesn't mean that things just happen automatically. I mean, you still have to follow some structure of actually doing a technology implementation. It's something that just we need to be very aware of. And once those technologies are actually implemented, you've done your a very detailed UAT and testing, and everything is going on fine. And of course, they would also probably give you a user manual. You go ahead and update your SOP with all the new steps which have come in. Now, of course, there could be certain SOPs where it is completely new, so you might have to create it from scratch. But for most things, you might just have to plug in some of the gaps which have been addressed by this technology intervention, and then you can go ahead and start out the entire rollout process. Now, again, how do you do the rollout, right? I mean, it's not something that you can do. I mean, a big bang approach rarely works. Maybe you do it division wise, maybe you do it branch wise, get feedback, change it, and then maybe you might have to do some tweaks, and then you actually go ahead and implement it across the entire organization. And we also need to set up a process for monitoring adherence. It is very easy, honestly, to slip into the old ways of doing things. I mean, it is natural. It's a very human tendency, right? I mean, you start doing something new, you face an obstruction somewhere. Maybe at first, of course, you are excited to try and solve it, but then beyond a point, it does get a little frustrating, and you might feel, oh, the earlier way of doing things was much better. Maybe it was, right? So that is what we really need to try and figure out and ensure that there is a constant monitoring happening for these processes, so that we don't really slip, or we identify issues and try and address them. Okay, so I think that is what I really wanted to talk about SOP. So again, if you have any doubts or anything or any queries, etc., please feel free to we can definitely discuss now, and then I can get into the next part of the seminar, which is to do with the which is to do with Procure to Pay. Okay, okay. So let's now get into the next phase. So let's first talk about the finance taxonomy, right? Now, what are all the activities or the process that we do within the finance domain itself? So if I really do, I mean, we can probably do a broad split into strategic finance and maybe operational finance. There are two broad splits that we can do. Now, strategic finance essentially covers things like budgeting, operational budgeting, capital budgeting, as well as future forecasting. And then we have the operational finance side of it. So maybe I'll just spend a little bit of time on strategic finance and then go into the next, and maybe again just quickly talk about these things. Because of course, we are aware of these terms. It's something that we probably do on a regular basis, but it is just to give some sort of structure to the entire exercise. When it comes to budgeting, I think it is probably one of the most important exercises that we do. I know it's usually something that most people don't really like to do, because it is honestly very difficult to predict the future. So we probably just want to say, oh, let's look at last year expenses plus say maybe 10% on account of increments and other hikes. Let's just give that as a budget. But that is a very standard way of doing things. But there are always issues with it, right? I mean, then we are never really going down to the next level to figure out what are those drivers which really drive, which have an impact on those costs, or the drivers which have an impact on our revenue figures. Until and unless we actually get down to that level, our budgeting exercise will be just on paper, and maybe we are taking a very subdued view or a very conservative view of our future targets, and we will never really achieve improvements or a quick rate of growth. But that is why that's why budgeting becomes a very important exercise. And budgets are something, I mean, again, there is no very quick way of doing things, right? I mean, there are multiple philosophies which exist within budgeting. I mean, you have something called zero-based budgeting, where where each and every year you start with a completely clean slate, and then for each and every expense that you put in, you need to fight for it. Oh, do I really need to spend so much on printing and stationery? Why do I need to spend so much on printing and stationery, for instance, right? So that is one way of doing it. I mean, some people actually believe in a very top-down view, or some people believe in a bottom-up view. Now, what does that mean? Top-down view is essentially your management, probably based on their discussions with with the shareholders or with the investors, probably have a target in mind. That maybe this year I need to reach this much of sales and this much of profits. Consequently, that becomes a very top-down view where the management decides, just gives targets to everyone, and everyone has to adhere to it, irrespective of what the ground realities are. Very difficult to really match there. The other end of the spectrum is a completely bottom-up exercise where you let each and every department themselves come up with a budget, and then you try and see, and then you actually just accept what they are, what they want. Now that becomes a very conservative way of doing things, because I mean, again, everyone is probably has their own comfort zone or the way they operate. So again, you don't want to give a very difficult target for yourself. Nobody wants to really do that, because I mean, at the end of the day, whether a difficult target or an easy target, if whatever target is actually accepted and you meet, it's probably going to be the same for you in terms of remuneration. So remuneration and bonus, for instance. So an ideal way would be probably a mix of a top-down as well as a bottom-up, whereby there are certain targets which are set, and then you really do a bottom exercise and see where they can really meet, so that you have a very good visibility on what the reality on the ground is, as well as what the expectations of you from your investors or from your shareholders are. And again, that is for operational budget, and that also has a bearing on your capital budgeting. I mean, again, you have to, of course, invest in plant and machinery, maybe in offices, maybe in vehicles and computers, so as to ensure that you can actually achieve that level of sales, or you can of course try and reduce your costs. So they both go hand in hand. And once your budgeting is done, the next task actually becomes forecasting. So forecasting is something which is typically done. Which is typically done on a 12-week basis. So there is always a 12-week rolling forecast which is created, so that, I mean, a 1-year target for a budget, or even if say you have a 5-year plan for it, those are all very large numbers when it comes to your the period of time. It becomes very difficult to really track that on an ongoing basis. Or you could always say, maybe I didn't meet my target this month, but I still have 11 more months to go. But do you really, are you really going to achieve that target in the next 11 months, is something which actually gets addressed through a forecasting exercise. So in the forecasting exercise, you actually also ensure that you give enough credence to your seasonal variations, or there could be some unexpected costs which come up. Maybe there is a tax demand on you. Maybe the rules undergo a change. Maybe the custom duty increases. All those things, of course, have an impact on you, because not everything can really be passed on to the end customer. So the forecasting exercise helps you do that. And forecasting is in terms of your revenue and cost, and also in terms of your cash flow, because that is very important to ensure that you have an adequate cash flow in your business, which ensures that you can really meet your costs as well. Now comes the operational side of it. What probably happens on a day-to-day, or maybe multiple times a day sort of activities. I mean, of course, we are going to do a deep dive on procure to pay, but the other things include order to cash, or our entire sales cycle, all the way from identifying customers. I mean, it probably goes into pre-sales, and then it starts off with getting a sales order, all the way to dispatching the goods, raising your invoice, collecting money, doing follow-ups, writing of letters. All of that is, the entire gamut is covered within order to cash. Then you also have around capital projects. Now, how do you really track a capital project? How do you run a capital project? Maybe you have a factory which is getting set up. Maybe it's I mean, either way, like greenfield or a brownfield project which is getting set up. Now, how do you manage that project? Again, it becomes an operational activity, because you're dealing with operational costs as well with capital costs. How do you ensure that you don't go beyond the budget? Are you taking in the requisite? Have you put in the requisite controls there? All that gets captured within the capital projects, and the end result of your capital projects will, of course, be your fixed asset accounting to capitalize your machinery or your factory, and then you charge depreciation, and then you ensure that there is proper physical verification happening. So all these myriad of activities which happen also need to be documented, and that's why it has a very direct linkage with SOP. It's not just something which I know we all do all of this, but is it documented? That becomes the most important question that we need to ask ourselves. And then of course we get into the treasury function. So it could be, how do you really deal with cash? I mean, in terms of cash forecasting, all of that probably gets captured within treasury, including how do you invest all your surplus funds, or what are your sources of funds? I mean, so that's something which on an ongoing basis is something that you always need to look at. You have your entire taxation function. I mean, I think as CA professionals, little needs to really be said about the taxation function. And you could also have intercompany management, because now again, depending on the scale of the company, depending on your clients, intercompany could become a thorn. There could be some transfer pricing issues which come out there. So it is important that that is also recognized as a separate activity and is being tracked. Now again, the objective out here is not that we need separate people to do the separate tasks. I mean, we're not really looking at segregation of duty or anything of that sort out here. You get the same people who are looking at, who are probably looking at payments as well as taxation, depending on their comfort and their skill level. But it is important that we identify that these are all the activities which we need to do, and enough importance is given to ensure they are happening on a proper and on a regular basis. And of course, we could also have inventory management, and the final piece, which is a close consolidated report. Now, this is where I think as accountants, we are involved in probably our maximum time probably goes here is to ensure that our books are closed on time. We have all the provisions going in, there are no revenue leakages, all our deposition runs are done properly. And maybe, in case we have group companies, are we doing the consolidation properly or not? And how do we finally report it out? Now, the reason I think we were really talking about procure to pay for the session is, I think, as I mentioned earlier, it is something which cuts across industries. So it's something that most industries can really relate to. If I say took up a topic like order to cash, that becomes very, very specific. Now, if I took up an order to cash for, say, an ITES company, that's something which a manufacturing company would never really connect with, because those things are very, very different. So hence, I think I also decided that we decided let's do a deep dive into procure to pay and look at what are some of the best practices which are there, and how do you really go about the implementation. And again, what are some of the typical issues that really come up and challenges which come up during implementation, and what are some of the solutions for that. Now, of course, I mean, it's not possible to, again, we only have about an hour and a half, 2 hours. It's not really possible to go into the depth for each and everything, but it is I am hopeful that you would get a good idea of what is possible in this particular domain. So let's look at procure to pay in detail, right? So now again, this is a taxonomy, right, from start to the end. Now, how do we really go about this entire process? I think it starts off with master data management. Now, I think first of all, what is master data management? I mean, is that something very important, right? Because where that really plays a very key role is to identify potential chances of leakages. Now, in case, say, you have multiple vendors created in the system, or you have multiple inventory items or material items created in a system, and they're all probably very, very similar. Now, the chances of fraud becomes very high, simply because you have a vendor in your system, you're getting an invoice from them. It probably looks okay because it's something you've done business in the past, and you might just pass it along. So hence your master data management is an important activity. Similarly, when it comes to, say, your material master, you have multiple inventory items for one particular type of product. So then how do you really order it? Because I mean, all your ordering depends on how much stock that you have now and what is your requirement going to be in future. So until and unless you have a very clear picture of what is there right now, it becomes very important to do the activity, and you might end up wasting a lot of money. So any working capital project that you take up, probably you might start off with a master data a cleanup in the beginning. Similarly, you could also have your service masters, your logistics masters, and your tax master as well. Now, your logistics master, now again, depending on the scale of the company, you might actually have tie-ups with your logistic partners and ensure that all the various stocks that they probably have are actually already stored in your system. so that your system can actually decide based on the distance your goods need to travel and based on the availability of the trucks and their tonnage, which really needs to be selected. So all of it, if it is in the system, it just gives you that level of transparency and enough information to take a very informed decision. And tax master, of course, if the correct tax rates are not stored, everything else then goes for a toss. So again, so it is very important to ensure that only the relevant tax codes and the tax percentages are actually stored in your masters, so that there is no scope of making any error in the future. So again, so this master data management is probably how everything starts. Right? If you get a vendor, you probably first need to onboard them and you create the vendor master. But probably before that, I mean, again, we get into the entire procurement phase. Now, how do we actually procure goods? The first thing, of course, is budget management. So as you see, a linkage with our strategic finance process, which we did to actually look at budgeting. So when it comes to any procurement, we first need to see whether we have the budget to procure it or not. Because if anything, you don't have the budget, you definitely probably will have to go for some exceptional approvals to ensure that can you even purchase it or not. That is why budgeting becomes very important and has to be done at a lot of details so that you are very clear what your future spends look like. And next, it comes to managing your requisition or the purchase requisition process or the PR process, right? Now, how do you really deal with it? I mean, is it based on someone picks up a call, someone picks up a phone, calls a procurement guy and tells them, oh, I want this particular product, please get some quotes for it? Or can you say maybe just have an entire catalog already listed with some, with rates depending on the agreements which you already have with vendors? Now, this becomes very useful for, say, things like your computer space and printing and stationery and things like those, where you already have a rate agreed with the vendor. So, maybe the user wants a new keyboard, or maybe they want a new monitor. Instead of them actually going to the IT department and then the IT department trying and finding out what the cost should be, if your budgets are very clear, right? You already know maybe you're going to need so much of capex in the next year, or you probably need so much of paper. If you, in case we really want to go for paper in the next year, you can get into these advanced contracts right at the beginning of the year, and maybe they are even multi-year contracts. So any person who wants to buy can just go into the system, see whether it is there in the catalog, and then place an order against it, of course, based on the budget which is available to them. Next comes the entire thing on strategic sourcing. So sourcing, again, doesn't mean that we've just identified a vendor, let's go and buy it from them. We have to always think beyond that. For this particular product, maybe we have rolled out an entire an RFP process. We have received certain responses and we selected a vendor. But do we just need one vendor for a particular product? It's always better to at least have 2 or 3 vendors, because even if that particular vendor fails, we always have a backup. So that is where you need to make some of these strategic calls. I mean, it may not just be on the money or the L1 alone. You might probably have to think beyond that, even in terms of quality or certain software aspects, which you may not necessarily be able to assign some points to it. Or you need to start thinking about assigning points to it, like maybe as simple as distance between the vendor's factory to your factory. The lower the distance, probably your turnaround time also increases, and you can actually think about going for a just-in-time sort of a just-in-time procurement, whereby you actually keep very little inventory, so that also reduces your working capital requirement. So all of those aspects are something which you really need to think about when you look at this strategic sourcing. And then comes your RFP process, or the request for proposal or request for quote. Multiple terms are used here, whereby you circulate it, you get responses, you evaluate them, and so again, it is important that you have a very documented way of doing things. So again, now this method of selecting a vendor, or the method of issuing an RFP should not be based on the whims and fancies of a procurement manager. It has to be a very standard way of doing things, so that it is always fair, and there is never any underhand dealing happening anywhere. So that is why we need to have this process, which is always followed by everyone. And again, that's where SOP also becomes important. And then you will have your contracts and agreements with the vendor. Now, how do you go about contracting, right? Do you have it on a piece of paper that probably goes to 10 different people, everyone signs it out, and then you get it done? Or and where do you store it? Do you just store it in box files in your office? Or can you look at some sort of contract management system, whereby your initiator would probably draft a contract, it then goes to their superiors, who would probably review it, give their comments. It might then go on to the legal team. It would probably they look at all the legal provisions. It then flows on to the finance team, where when you as finance professionals would actually take a decision on whether these payment terms are acceptable to you or not. Things like those, so that the entire chain is done on the system itself. And even other, even for signature, in this day of digital signatures and e-signatures, even there is no need to actually sign that document physically. All of it can be done on a contract management system itself. And the added advantage is that now all these contracts typically would have some sort of SLA, which is or a service line agreement, which is there in the contract, which ensures that the vendor is actually meeting certain targets. Now to track all of this offline again becomes very difficult, and that is why if you have a system whereby all of this is captured, you can probably even link it back to your ERP. Whereby for each and every of these multiple things that are listed, is it really happening on time or not? And next, and the last, of course, on managing the suppliers. You also want to, this probably becomes the most manual activity of it all, becomes very difficult to automate, because there are, the interpersonal contact and the connect that we have with people is what really ensure that you probably get the best price there is, right? And you ensure that they favor you and they deliver goods to you on time, especially when there is some emergency. That becomes the entire manage suppliers piece. But again, although that is very that becomes very individualistic, at least you set guidelines that these are probably the 10 tasks that you need to do. Now, how you do it probably is a very person specific skill. And the last, we've got what we need to buy from the PR. We've identified the customer, so we've identified the vendor. We've drawn up the contract, and we finally go and raise a PO on them. Now again, there are of course expenses where you might feel, let's not really create a PO. We might have to go in a non-PO route, which again I'll cover in the next slides as well. So we've done the ordering, and next we come to the goods received, goods and services receipt, which is the entire GRM process. So whereby you create a goods receipt note, maybe at a factory, at a warehouse, at a corporate office, wherever the goods are actually received. How do you really go about this entire activity? And so we've done the PO, we've done the GRM. The next is of course the invoicing and then the payment. So how do you get the invoices? How do you receive invoices? How do you process invoices with PO? How do you process invoice without PO? These are all individual processes which are quite distinct from each other, and how do you really need to approach them? Next, of course, comes the payment processing. So probably everything is clear. How do you ensure that payment is done on time, or maybe you need to hold back payment? And why do you hold back payment? Because maybe they have not probably fulfilled some contractual obligation. And that is where, again, having something, having all these obligations somewhere captured in the system, which you can always approach, see, and ensure that you are in a good position to take these decisions becomes important. Because again, the finance team or the payments team might just get the invoice and probably the approval itself. And how are these approvals also? How do you get these approvals, right? Is it on a paper? Is it on a workflow? Again, there are multiple such best practices which exist, which ensure that things happen in a smooth manner. And you also always have queries, right? I mean, the vendor always, I have delivered my goods, I have done my obligation, why aren't you paying me? Or why have you not paid me the entire amount? Vendor could have multiple such queries. Or, you've done the agreement, but you have not received the PO yet. So, or you've not really received feedback on the goods that have been delivered. So all those times, it is also important to ensure we have a proper query resolution mechanism put into place. And the last is, of course, on accounts payable close and reporting, which deals with all your accounts payable reconciliation. Make sure your subledger tallies with your ledger. Is there something which is outstanding? Do you do some direct confirmations from your vendor? Make sure there are no differences between you two. And last goes to reporting and analytics. Now, reporting and analytics is also very important, because that is what really helps you when your next contract cycle starts. How do you ensure that you can probably get a better price from them? Or how do you target, maybe there are long outstanding vendors, or there are goods that have received but you not really received the invoice against them? How do you look at those things? That's where reporting and analytics also becomes an important activity in this entire taxonomy, like we call it. All right. Sorry. Yeah. So, any queries or any further clarification that you need in this entire thing, or can we move on to the next, which is the best practices in each of these buckets?
Vignesh, I think there is one question in the chat box. If you can, answer it.
Just have a look.
It is from Ms. Kaveri.
Yeah. Thank you, ma'am. So, right. I think the question is that how are the risks and controls which are mentioned in the SOP also monitored on a regular basis, right? So now the way you typically do that is, I mean, of course, you would also have the ICFR audits and ICFR work which happens to check that whether all your controls are being met. But again, that is probably still a manual way of doing things. Now today, today there are actually technologies which actually look at your end, which actually do an X-ray of your entire process. So wherever there are any system touch points, the system will actually go through each of those touch points, make sure and create an entire tree of what process has been, how the entire process has been followed, and where all have there been exceptional approvals granted. So then it helps you to actually identify those cases and identify whether those controls are really being being met, or are they just being railroaded or being steamrolled just by giving exceptional approvals. That is one way of actually doing it on a live basis. The other way is, of course, to have a proper have a good internal control team which does not look only in terms of an internal control team which actually focuses on the processes than on the mere documentation alone. Because I mean, typically that's another challenge that we always face, right? I mean, especially when it comes to auditors, because they might just ask, okay, just show me all the documents, whether the documents are in place or not. Whether do you have an invoice, do you have a PO for it, do you have an approval, has someone signed on it? That is not what we really need to do as internal audit. What we really need to do is to check whether the processes are being adhered to or not. This is some other ways that can actually be done. And yes, sure, I'll definitely share this PPT after the call. Was there anything else? Yeah, okay, fine. I think then let me just move on to the next slide. Okay. Now, this is what I call the art of the possible, right? What all is possible today. It is not something, each and every of these points are not something which we can do it today. I mean, which can be implemented all at once. It's all a journey. But what is really possible in this day and age, right? When it comes to master data management, one of the art of the practices is that we have a centralized master data management team. Usually what happens is that when it comes to products, maybe you have a different team who takes care of the vendor and the inventory. When it comes to services, you might have end up having a separate team, and all of which probably resides within your procurement function. Now, if your master data team is part of your procurement team, that is definitely a conflict of interest there. So, and again, master data is not, we are not only talking about one particular type of master data. What we are really looking at is your vendor master, your customer master, your fixed assets register, your inventory masters. All of that should be controlled by probably one central team, which might which reports it directly either to your FC or to your CFO, as the case may be, so that there is no other pressure which comes on them. Because I mean, let's be clear, right? If you're as simple as your bank account, if the bank account in your vendor master is incorrect, you just don't know whom you're paying. So hence, it is important that there is adequate importance given to this particular thing. Next, when it comes to master data, you also have, today we have vendor portals. So you have softwares. I mean, you either have software which are extensions to your ERP, or you have separate portals by itself, which actually act as a vendor portal, whereby your vendors can log in. They can actually they can update the information so that it doesn't really become your headache. But no, they might change their address, they might change their bank account. You give access to them to make the changes, and of course you verify before it actually goes into your system. Similarly, they can actually use this vendor portal even for other activities, such as raising an invoice on you, or tracking where the invoice is, checking when the payment is due. All of that visibility becomes possible through a vendor portal, and that only is going to reduce the work which you need to do. Because otherwise, for every small little thing, your vendor is going to call you. Vendor might actually end up calling your procurement guy and asking him where it. The procurement guy, I mean, since he might not have access to all the information, the procurement guy will then end up calling you in your, in accounts and finance, and ask for information, and then you have to dig up the information. All of that then goes away if they have adequate access to relevant information. I'm not saying each and every type of information, but this is the relevant information. The way, say, it works in your e-com sites, right? You place the order, it is currently being packaged, it is being shipped. As long as you have that level of visibility, you don't feel the need to call up Amazon or Flipkart and check where it is. And we also have robotics and cognitive technology which help to auto create the vendors in the master. So if your vendors have actually uploaded their PAN card, their GST registration certificates, or your cancelled check, for instance, as long as those details are uploaded, you could have an RPA bot, or a robotic process automation bot, to actually look at all that information and then create the vendor master by the system itself. And I mean, all the human really needs to do is just to verify and then approve it. So that there is a lot of time which can actually get saved in this activity. And this is something which can happen throughout the day, right? I mean, it's not within those 8 or 10 or 12 hours which your team probably is working today when it needs to be done. So this ensures that your turnaround time to create a vendor and to release a PO becomes that much shorter. Let's go to when it comes to procurement, right? So procurement, one important concept which many companies are trying to implement is a no PO, no pay. I would say no PO, no pay concept. So this ensures that each and every purchase backed by a purchase order, which in turn would be backed by a line item in your budget, or maybe there is an exception approval, so that there is no, otherwise you have very little visibility into what your future cash outflow is going to be. See, one part is control, that, oh, let's have a 3-way match, that is one part of it, which is probably, I would say, more on the operational side of it. But from a strategic side of it, what a PO really helps you is to identify what your future cash flow is really going to look like. And that makes you take proper decisions as to, do you need to arrange for cash, or would you really have some surplus cash left by the end of the month, which you can invest somewhere. Hence, many people are actually moving into this particular method. But again, it may not work for every type of thing. So, I mean, I of course cover this particular aspect in the subsequent slide as well, whereby what are the typical challenges that you face while trying to implement this, and how do you get around it. I mean, maybe you don't go 100% no PO, no pay, but maybe you at least aim at 80%. In case of 90, maybe you go up to 95, right? That's something which you can definitely aim at. Then you could have your approved purchase requisitions, which are auto converted into a purchase order. So again, your end user department might actually raise a purchase requisition through the system on the purchasing team or to their superiors, which is approved. And then do we really need a procurement team to actually look at all the details in that particular purchase requisition and then create a PO which is then sent to your vendor? Do you need it? No, you can actually do that. Or you can actually just do a flip. It converts the PR into a PO, and in the future, it actually converts a PO into the invoice as well, which just makes your life and the vendor's life easier. So the vendor portal that we discussed for master data management also ensures that you can actually auto send the electronic PO directly to the vendor. So again, so you don't have to actually physically take a print or even send it by email. All of it can actually happen automatically, and it gets stored in that vendor portal itself. So I mean, even in this day and age, most ERPs have an auto emailer functionality, but if it is routed through the portal, it just gives further clarity in the future. Now, when it comes to receipt, receipt, how do you really go about doing that? Now, one challenge that most people face is that they get invoices in all their branches, in all the offices. Every vendor sends it to a different location, and it becomes very difficult to process it. And maybe some guy just forgets to send it to the accounting team, and it never gets. It becomes quite difficult. Yeah. So a centralized receiving office is something which is really even if it's difficult to have one single office, let's at least start having one office in one region, right? So that you don't get your invoice, you instruct our vendors that they should send their invoices only to that one particular address, and not it doesn't go to each and every individual person who has actually taken the service. So for instance, say you've taken audit services, the auditor might send the invoice to you. Why should that happen, right? And then you in turn have to send it to some other person to procure, to process. It can directly go to the central team. Now the central team can actually scan it, which I have actually covered it in the next phase, which is invoice processing. And you also use barcodes to capture data for this particular goods receipt. So whenever you get you get your invoice, you fill up the details regarding that particular invoice, and a barcode gets affixed on that. It's easier for further processing. And you also need to review your open on a regular basis. Now this is something again, so which is more process specific, or than I would necessarily say a technology intervention here, because automated reporting and tracking of pending receipts is also important, because if there are just POs which have been issued, there is no goods, there are no goods receipts done against that. Now, should these POs honestly exist? Should they be cancelled? Do you need to follow up with the vendor? Is that project happening, not happening? So it is important that you do a very regular review of this. And now the first point is something which is probably done on a manual basis, but you also have automated reporting. You can also have a robotic process which actually takes care of this. I mean, it's not necessary that everything has to be done manually, or it is also not necessary that you have to get everything on the system or get everything automated before you can start executing it. So you first start out with the manual so that at least your processes are in place, and then you go towards automation. Next, when it comes to invoice processing, so you have workflow-based, workflow-enabled approvals and auto-generated notifications. So the way it will work is your central team will collect the invoice, they'll stick the barcode, and then it goes into a scanning team. Your scanning team will actually do a scan of the entire document and capture it in the system using intelligent optical character recognition, or IOCR. And it is also linked to a document management system. So you scan the invoice and it gets stored in your DMS or document management system, from which it can always be recovered quickly. Now, depending on the type of invoice it is, say if you already have a GRN, there's a proper three-way match happening, you don't need any further approvals, right? I mean, somebody has confirmed that the goods have been received and are of proper quality and quantity. Your invoice also matches with that. Do you really need one more layer of approval there? Probably not. You can just go ahead and directly process. So then it gets into the payment queue. But there could always be cases where where probably the quantities don't match, or maybe there is no PO at all, and you might need to take somebody's approval, or it's a very high value transaction, and you decide that maybe it's a high value and a one-off transaction. You decide that maybe it is necessary that you actually take someone's approval. And it actually becomes very important for services. For goods, I would always say your goods receipt is a very streamlined process, because if you have not received the goods, you really can't do anything for them. But for services, it is a very gray area. I mean, you have received services, you've probably used it and you've already done something else, but you've not probably done a service entry sheet into your system. So that's where this workflow becomes very useful, because then there is an auto reminder that goes to that particular person. If it can be identified and recognized right from the PO or from the invoice, or maybe you have to probably manually search, oh, maybe it's a marketing invoice, or marketing invoices have to go to person A. Let's send that the workflow to person A. So the approval happens online. They raise the service entry sheet online. There's a three-way match and it's all done. So three-way match, essentially what I mean is what is mentioned in your PO matches what is mentioned in your goods receipt, and matches in your invoice as well. And whenever it comes to any vendor queries and disputes, all those can actually be handled by chatbots. So just like you have chatbots in most websites that you go, you probably have a chatbot, right? You say you want to renew your vehicle insurance. You log into your insurance app, and they have a chatbot which pops up and is eager to help you. So you probably create certain scenarios and certain specific paths that the vendor can actually go through, and then all of it is handled right there by the chat bot itself. So the vendor also does not necessarily have to go through multiple windows and menus and figure out where they need to do, where they need to go. All of it can actually be handled by the chatbot. And wherever the chatbot is probably faced is where you probably need to involve your vendor or your query management team, which actually takes care of these queries. Next, we have for invoice payment. Now, how do you do your invoice payment also in a much better manner? So, I mean, often what happens is that by the time you actually receive the invoice, it is very late in the entire process, because maybe the approving manager has sat on it, say maybe for a month, and then has finally, after multiple follow-ups from the vendor, they actually release it to finance to approve it, to actually make the payment. So when it's so late, you don't really have too much of leeway with you. Okay, when you've got this, you need to make a payment. You just end up making the payment immediately. Or there is a demurrage charge that you need to pay. You have to pay it immediately. You don't really have too much of choice there. But when you start getting visibility from all these earlier activities, is when you can set certain defined payment runs, that you don't do a payment each and every day. Maybe you do a payment only twice a week, or maybe it is once a week. Maybe you do it on Tuesday and the Thursday, for instance, right? So all the payments which need to happen, say till Friday, you make the payment on Tuesday, so that there are no any late payments, and so on and so forth. But that also ensures that things get done in a more automated manner, and your team is not doing this activity on a daily basis, because there is no need. Right? I mean, on one day, let's accumulate everything and then just finish it off. And how do you do it? You don't really do it manually. Today, there are all your vendor payments can actually be integrated with bank portals, so that if you approve the payment in your system, a batch file can be generated, which then either you upload it manually to the bank site, which would then of course go on to the authorized signatories who would log in and approve it, or it could probably be even a direct interface with the bank. That let's say that maybe at 2 p.m. Maybe, or at 11, 2, and 5 every day, whatever payments have been processed, a payment batch file is generated and is automatically uploaded to the bank portal, and then it then just goes through. So what this also helps, where this also helps, is for your bank reconciliation. Because bank reconciliation is of course quite a tedious activity which you need to do. Now, if you have this level of interface with your bank reconciliation is actually automatically taken care of. Because whenever the bank actually makes a payment and say maybe in the morning of the next day, you actually get a bank statement in an electronic form from the bank, it also gets uploaded to your system and bring with all your payments. So are there as per books payments as per the bank reconciliation is also ready. And of course, there's the other element of bank reconciliation when it comes to receipts. That is a different topic altogether. But of course, there are also many ways of trying to automate it. And one of the ways that people typically do is to, I am digressing from P2P here, but since again I'm talking about bank reconciliation, I think I would like to also talk about that aspect. Is many people have a virtual bank account which is specific to each customer. So when it comes to you, probably just have one account with ICICI, for instance. But when you give the account number to your customers, you give them a virtual account number which is only specific to that particular customer. So what happens is whenever there is any receipt coming into that particular virtual account, the system immediately knows to which customer that belongs to. So that again reduces your effort. Yeah, sure. So again, so that again reduces your effort for reconciliation. And most, maybe when it comes to a customer, especially manufacturing, probably we have thousands of customers. Look at a telecom company, right? You have lakhs of subscribers, millions of subscribers. There is no way anybody can actually do this manually. All of this is happening pretty much in a very, very automated manner. And again, the invoice pay, again, the next part of the vendor portal comes out here, where the invoice payment status is also mentioned on the vendor portal itself. So the vendor portal will probably also tell the vendor when is a likely due date for payment, depending on whatever has been agreed based on the contract, based on approvals, all of that, right? And finally would of course be the close process. How do you, okay, we've done the payments, we've processed the invoice, we've done the payment, all of that is done in a very automated or a system driven manner. Now, how do we actually go about closing it? So accruals can also be done in a very automated manner today. So most ERPs also come with something called an accrual engine. So for non-judgmental transactions, the accruals can actually be done based on a rule that you set up. The best example would be something like a lease payment. The lease payment, you can actually create a very simple program whereby you put all your rental payments, including escalations and all of that, and it would pass an accrual on its own. Now, whether you make a payment or not, that is separate. Of course, a payment could be it's a different ball game depending on whether or not you're satisfied with the performance or all of that. But at least when it comes to accrual accrual and provision, at least that can happen in an automated manner, so that you are always very clear on what your position looks like. Then you also have defined process KPIs and SLAs and turnaround times, which are monitored automatically. So what it also ensures that there is, everybody has. If you have a workflow system in your organization, your turnaround time can actually be monitored automatically. So say maybe your central receiving team has actually sent an invoice for approval to a department head. Now, if the department head does not approve it for a month, and then it comes to you in finance to actually make the payment, the the pressure would always come on you. Oh no, this is an important payment that needs to be done today itself, right? I mean, what is lost is that somebody has not actioned or has not taken action on it for a month. That never gets captured anyway when it's all a paper trail. So that is where this workflow becomes very important, because you can also send auto reminders. If someone has not taken action on something, let's send an auto reminder to them. And this also helps in your close process, because not every provision can of course be automated, because for certain things you are dependent. I mean, especially for services, have you received the service or not? So you probably have a very well defined close calendar, which is okay, these are all the 10 different departments or people who need to give their provisions. Have they, I mean, if they don't give the provisions to you on time, can you close the books? No. Or you might close the books and end up missing on provisions, and finally your profit numbers or your numbers don't really look correct. So that's where so all of it can be done through a system, which also helps in auto monitoring. And process KPIs also become very important. I mean, we're not just talking about your actual KPIs. Oh no, what is my ROCE or what is my ROI? Those are very high level KPIs. We probably have to break it down to a level that you as a process owner can actually look at. Now, if I look at, say, fixed assets, for instance, right? How many assets do we have which have negative value? Or how many assets do we have which have zero value? Should such a thing even be possible? These all become process KPIs, or which you can start monitoring and which you can start publishing, again, all on an automated manner. And last would of course be to, I mean, again, you can have robotics and you can have cognitive technologies which actually, review your POs, which review your creditor aging, which, based on past experience can actually tell you, this is something that you need to take an action on, or is something which you need to follow up. So again, instead of you actually preparing the reports and then identifying, okay, I prepared a creditor aging report. Now, then you decide, oh, so these are the 10 creditors, or which I probably need to understand why you have not received any approval for payment. So that is why these technologies help you. So you can directly go to the last step, which is actually following up and getting information. So as long as you can actually reduce the effort that you spend on operation activities, you get to spend more time on more value adding activities. I mean, you might have heard this concept, right? You typically have what are called as non-value adding activities, your value enabling and your value adding. The aim of any process improvement is to eliminate all your non-value adding activities, to reduce your value enabling activities, and to increase your value adding activities, the time that you spend, rather. So as long as any technology solution helps you do that, I think you can definitely go ahead and do it. Okay. Yeah. Any queries on these? Please let me know if you can pick up. Okay. So I'll move on to the next slide. What is a journey towards best in class? We can't do all this in one day. We can't have a vendor portal. We can't have OCR. We can't have chatbots. We can't have AI-based tools. All of it can't happen in one day, or even within a single improvement cycle. All of it is probably iterative and takes a certain. There is a way you go towards it, right? So foundation, I don't know what are all the foundation things which you probably need to be very clear on. I mean, you need to have a good workflow system. Your master data needs to be very clear. You probably need an OCR based solution. You probably need a good document management system so that all of it is stored online. And you probably also need a customer or a vendor portal. Now, the reason I'm saying these are foundation, I mean, maybe, I mean, of course, you could have different steps within the foundation itself, right? First you do your master data cleanup, then let's have at least a workflow tool, or let's at least first ensure that all our procurements are backed by POs. The steps within itself, but the reason I'm calling it foundational is that till we really have all these things done, we can never really go on to the next stage. And in 2022, I would definitely, I mean, these are not technologies which are very futuristic. I mean, these are things which are probably being done for the past 10, 12, 15 years almost in certain, especially some of the bigger companies. Like say, I would say, like, things like Castrol or Reliance and HUL. These things have been being done probably for the past 10 years. So which is why I would really term these as foundation, because if we really want to be a class apart, we definitely have to get these things done today. Next, we go towards the automation aspect of it. Here, there is more manual work done, which is enabled by technology. Let's probably then look at automation. Things like a single instance of the ERP across all locations. Right? Like for the first stage, you don't need that. Maybe you have to do some additional coding to ensure that all your technologies work together, even if you have multiple instances. But let's start looking towards that. Let's look at RPA at that point. Right? Can some of these steps actually be done by the RPA? Can the RPA actually go ahead and create the vendor master? Or no, so that we try and eliminate some of the human effort. Can we have some of the automated provisions happening? And can we also some of the concurrent audits which happen? The concurrent audit, again, I'm not necessarily talking in terms of manual physical audit. Some of these system-based audits which are getting popular. But there are tools like Celonis, which actually which is like a bolt on SAP and other ERPs, which can do which actually does a complete process audit and just gives you a result at the end. So probably the next step. Next for me would be like value added platform for delivery. Like how do you show value add to your customers? So your customers out here would be the procurement team, would be your vendor. How do you add value to them? Right? You start having chatbots, you start having deep dive analytics, where your analytics are not just restricted to say open POs or to open invoices. Can we look at price comparison? Can we start actually advising our procurement team in terms of whom do we really, whom should we partner with? Can we have some automation in terms of automatic JEs, in terms of automated reconciliations? And we also have a platform for business planning. Business planning, again, why this becomes important here is that if you have your entire business planning done via, if you have a system to do it, right? You could have, there are of course ERP-based solutions. They are completely standalone solutions whereby you define your entire driver tree. These are all the 10 factors that probably impact your revenue. Now, those 10 factors probably could have 3 factors individually. So you have an entire driver tree created, which gives very good clarity on what do you need to focus on, how do I start forecasting and ensuring that your budget predict and AI and things like where can blockchain actually create a blockchain amongst yourselves so that when the goods are actually which ensures that the bank is also aware that the done. So and again, so as the quality and bank also knows that they need the payment and the released. So those are that you can look at. But again, it may not be a problem of yours. They start the foundation things. Then we can go towards. But again, I will only go to depending on you can actually skip something. You can certainly possible. But you need to be very clear on certain elements, which is like your master data management and your process needs to be very well defined. And that's where again your SOP becomes important. If your SOPs are clear, it becomes much easier. Okay. 20 minutes left. So implementation challenges and solutions, right? I mean, all these things are good. I mean, probably are very idealistic, you might think. Now, how do you, but we will definitely face some challenges, and how do we go about solving it? So no PO, no pay, right? So that becomes very difficult because people might say, oh, I know the exact quantity only when I'm ordering. And every time before I order something to create a PO becomes very difficult because no, these are smaller quantities which I need to place repetitive orders, or there are things like utility bills, or there's some advance payments. How do I really create a PO for that? So what we can do is taxes and levies can maybe be kept out of the PO route, because again, you're not really, I mean, you get an income tax demand, you're not really going to raise a PO on the IT department, right? You probably might keep that out of the PO route. But when it comes to utility payments like electricity and gas and water, you actually have, most ERPs actually have a utility POs which can be created, whereby the quantity is never really mentioned. And as in when you receive the bill, you actually fill up the quantity, and then the invoice gets processed. Or you could even have open POs. So you have a PO which say remains open for an entire year, and as in when you actually place those orders, the quantity keeps reducing. So that also, again, that also gets tied up probably with your entire catalog, whereby you decide that, oh, maybe you have raised a PO for say 100 monitors, and as and when your monitor actually gets placed by the user department, that keeps reducing. So next comes vendor consolidation. So again, it probably goes back to your master data management and your master data cleanup. So you probably have thousands of vendors today. Do you, are you on a regular basis really dealing with 1,000 vendors? Of course not. You might probably only deal with 50, 60 vendors on a regular basis. Then you need so many vendors to be active in your system, because if you have vendors open, there is a very high chance of fraud, right? I mean, you just go and change your bank account details there. You send an invoice which probably gets approved, and that's about it, right? You might end up making payments to them. So how do which shouldn't really happen. So again, the challenge is there is that, okay, fine, let's try and reduce the number of vendors with whom we deal, and let's maybe block all the other vendors. But then the challenge is that, maybe we have one-off orders, especially regards to capex spares or capex repair items, or maybe for some specialized materials. So okay, so the way we really go about doing this is that I think there's some problem. Just give me a minute. I think unfortunately, I think I forgot to delete certain things. Just give me a minute. Yeah, sorry. So what I mentioned about vendor consolidation is that let's procure maximum goods from a regular set of vendors. First of all, that ensures that you get the best terms from them, and that is where, like I mentioned, we can actually assist the procurement team. When you see, we are the storehouse of all the information. That everything, all the data points, everything is probably available with the finance team. Now it is up to us to make sure that this data is used in the best possible manner. And it's not just data into information. Let's go from data to information to insights. Can we be an insights-driven organization? That is the ultimate goal for any finance function. Of course, it's not that you only have one vendor, because that is a huge risk for you. Because if that vendor fails, your entire operation is then probably goes for a toss. So of course, you do have 2-3 alternatives for each and every item, but and of course you give business to most of them, so that you can in case there is a sudden order which you need to go to say to your vendor C, you can always approach them. And you always do a regular review of vendors for the nil balance. So maybe there's a vendor has a nil balance here for the past 6 months. Let's block it, right? Maybe we can even set a rule that on an ongoing basis, the system actually just gives you a report of vendors which have nil balance for the past 6 months. Now, you can either configure a system, a specialized report to do that for you, or you can always have an RPA bot which actually generates this report, which puts the filter, and you just look at the final result. And then you, of course, I mean, again, I'm not suggesting that you block the vendor automatically. You, of course, will have to discuss it with your procurement team, get their confirmation, and then you can block it. And unblocking vendors as in when required is very again is saying that you go and by following a documented set of steps. Okay, so that's where SOP becomes very important. So that again, this is an activity which probably doesn't happen very often, but as long as you which is documented and everyone knows what steps to follow, there is no confusion when such an scenario arises. Next comes the centralized query management, right? So typically what happens that each procurement manager has a relationship with their vendors, and they probably want to get have everything routed through them. But that ensures that they're always in touch with the vendor, and that relationship is maintained. But again, that doesn't mean that for each and every small little thing you really want to be talking to a vendor. So basic queries can probably be done through a chat team. More complex queries can be addressed by the central team itself. And so procurement managers can actually work on enhancing the connect and relationship, then order and then any routine query handling. Because I mean, and that is how we actually even convince your procurement team when you actually think about implementing something like this. Because this is something that directly impacts them, right? I mean, like having an automated invoice processing has no real impact on your procurement team. So they'll probably be okay with it. They might definitely give their go ahead. But wherever things actually start having an impact, is when we have to get that go ahead. And this is how you would try and explain things to them. Next comes your payment term consolidation. Like I mentioned, it's always better to have a defined payment cycle, whereby so that you don't end up doing this activity on a daily basis. And then you could have cases where vendors may not really accept your weekly payment. They were, whenever you get the invoice, I want the payment to be done. But no, by fixing all the steps prior to that, you actually get the invoice much in advance of its due date. So even when it comes to due dates, also you have standardized due dates now. So that it's not that each and every you may not necessarily have vendor specific due dates. Somebody says 15, somebody says 30, somebody says 45, somebody says 60. Let's not have or somebody says you pay me after 40 days. Someone will say after I want after 20 days. You don't have so many different due dates. You probably consider them. You could maybe have 4 or 5. Again, depending on the vendors and the type of vendors. I mean, if it's a very critical vendor, probably you might have to go ahead for a much shorter due date. But again, all of this, I mean, and how do you sell this idea? You do a working capital calculation, right? In case you move your payment term, right? You calculate your average payment term from your due date. Maybe it's say you pay on the 7th. Now, if we can push it to 14 days, to 15 days, to 30 days, it's just going to increase your working capital. And that will, of course, have an impact on your profits as well. So, any measure that you come up with, if you can assign a money value to it, it will never be very direct, right? It could probably be a very indirect way of actually figuring it out. But if you can assign it to it, it just makes your life that much, it makes your life that easier when it comes to convincing people. And of course, you're getting funds to actually go ahead and execute it. Yeah. So of course, maybe you have 2 weekly payments, which ensure that there are no overdue payments, and advance payments and immediate payments can always follow a different process. Like I mentioned, demurrage, you have to pay so that you get your goods released from the port. You don't want to have a payment term for that. Oh, I'll pay you after 15 days, right? Look, you can't do such things. Or you might even have advance payment. I mean, especially for capital projects, or even for consultants like us, you probably will have some sort of advance payment coming in there, whereby you might have to pay something in advance, and that can also always follow its own process. And automated month-end provisions, right? So it looks good in theory. Does it mean that you might end up, there could be inadequate provisions, or you might end up making excess provisions? How do you control that? So a PO-based approach always gives you good visibility for forecasting as well as for provision, because you know what is expected. And then you always, whenever you create a PO, you probably also give an expected date of completing the service or getting the goods. So if it has already crossed that and still there is no expense booked against it, that's a report that you generate, and then you can start following up with the requisite teams. And you implement this only for the non-judgmental expenses like leases and insurance and things like those. So not for each and everything, you can't do it, but wherever possible, you start doing it. And that I'm talking about from an actual engine perspective. Now, when you go to the next stage of having any cognitive or machine learning, that analyzes your patterns, analyzes the way you've been provisioning in the past, and then suggests provisions in the future. So that there the error chances become much lower. And you always have manual checks in place. I mean, nothing, we are not really giving up control to the system or to the computer to do everything on its own. Our job is to ensure that things are happening fine and not necessarily do it all by ourselves. Let's try and get some help, or essentially, let's try and get someone else to do the work on behalf of us, and that someone else again doesn't. No point of having another person to do it. Let's have some of these things to be done by the computer itself. So yeah, I think I've probably almost reached the end of the presentation as well, and I've completed all that I wanted to cover today. So yeah. So again, if you have any queries, please feel free to reach out. Always available. I'll of course share this deck with you as well. Again, this may not really go down to the level of depth that you can probably do everything on your own. The intention is that it gives you an idea of what is possible and what you need to go towards and how to do it, and gives you a roadmap more than anything else. So yeah.
Yeah, so whoever may have questions, they can ask over here.
You can please feel free to either ask on the call itself or on the chat box. Either way.
I guess there are no questions coming up, Vignesh. You have delivered a wonderful session.
Thank you, and thank you, everyone.
So Vignesh, see, there is one query which has come on the chat box.
Yeah, I'm just looking at it. Correct. So when it comes to these maintenance type of purchases, right? I think then having an open PO is really useful. So you don't necessarily, you can, it's not necessary that you put your entire, you might have a PO for a much bigger quantity. And as and when you receive these materials, you do a GRN only to the extent that you receive for. But I can see, even before buying something, you probably would have a good idea of the vendor from whom you need to buy. So hence you can probably use the open PO approach.
I think there are no more questions coming up from the participants. So, we can end the session here. So Vignesh, this was really amazing and very insightful session. I don't think you have left any stone unturned with regards to this particular topic. And, on behalf of all the members, participants, and from the Ahmedabad branch of ICI, I thank you very much for spending your time and enlightening us with, your knowledge. Yeah. So once you share the presentation, we will send this across to the participants as well. So this will be in benefit of all. Thanks a lot.
Thank you. And I would like to thank you and the entire Ahmedabad branch, patiently listening to this. And of course, asking questions as whenever you have any doubts. So it's been a wonderful experience for me as well. And I look forward to hopefully meeting you all in person in a future seminar.
Sure.
Thank you so much.
Bye-bye.
Thank you, sir.